All right, very good. Well, hey, welcome, guys. My name is Jeff Gibby. I work with Thomson Reuters, and particularly I sell the MetaStock program. And I'm going to talk a little bit tonight about how I trade. I'm going to show you some methodologies that I use that I just really enjoy actually showing. I try and keep it a little bit interesting. You'll give me the stocks we'll look at. I'll spend some time in PowerPoint just kind of talking about stuff. But for the most part, we're going to let you guys we're going to take a look at the stocks that you're interested in. And I'm going to show you this methodology based on, those stocks that you want to see, or those stocks you're interested in. We can also do futures, we can do Forex, we can do pretty much anything that you're interested in. So I want to give you a little bit of background on me. I don't like to toot my own horn. I have been working for MetaStock for about, I want to say just about 15 years now. My job is very, very fun. One of the responsibilities that I do is a lot of training on software and how the software works and how to use the software. It's taken me all over the world, and I've trained Saudi sheiks in Saudi Arabia for 2 weeks on how to use MetaStock. I've given big, huge stage demonstrations. I've done it all, and it's a very, very enjoyable part of my job. I wish I could do webinars all the time. So anyway, that's a little bit of a background on me. I don't claim to have all of the answers to trading. I have a very specific way that I trade. It's very much what I'm going to show you today, and hopefully it's enjoyable to you and something that you like. If you're not familiar with Thomson Reuters, it's a huge company, and they have lawyers. They want me to, in fact, those lawyers would like me to read this legal disclaimer before I go any further. So let's go ahead and do that. The demonstration today is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Equus International and Thomson Reuters shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Okay. Want to add a little bit to that. I am not a certified advice giver. I don't have any government certifications or what have you to give you advice on trading. We will be looking at your stocks today, but everything I say should be construed as educational in nature. And I'm going to stay away from giving you advice on what to do on stocks today. Really, that's not my whole point. That's not the point of technical analysis. So now that we got all that legal stuff out of the way, let's go ahead and get to kind of the presentation, that kind of stuff. Barry Miller asks, are you expecting employment applications? Actually, Barry, if you're really serious about that, we have an opening in our sales team right now that they're interviewing for. So if you're interested in actually working for Thomson Reuters, well, you better hurry because I know that they're starting interviews. Anyway, if you have questions, go ahead and let me know. Type them in. I'd be happy to kind of field them as well. A little history on MetaStock in case you're not aware of it. Just by curiosity's sakes, if you currently use MetaStock, let me know by just typing it in as a question, and that'll give me a good idea for who I'm talking to and that kind of stuff. To give you a little bit of background, we're a company that's been in business for a very long time when you start to talk about MetaStock and being a software company. We were actually founded in 1982, so that's about 28 years ago. About 1995, we were purchased by Reuters. That's been a fairly good relationship for us. We basically decided, basically they purchased us, and we've been able to power our software, which does technical analysis and that kind of stuff, with all of the news and the information that they have. And we actually have, and we're one of the places where you can, at a retail price point and at a retail level, get Quote Center, which we package up and use, and it has all of the same information that huge institutional customers subscribe to. We've sold about 310,000 copies of the MetaStock software over the course of that time period, and we've done pretty well with it. Today I'm going to get really, really specific. We're not going to talk about MetaStock. in terms of the power tools and what we call the power tools. What I really, really want to do is focus on this one very small methodology in MetaStock. And you'll see when we're going through it, there's like 30 or 40 different methodologies that are built into the software that you can use right out of the box. This is just one of them. So we'll talk a little bit about MetaStock in terms of, you can scan for signals. If you're trading stocks and you're interested in stocks, you can scan for stuff. But really we're going to get really, really specific about what RMO is, how it works, and how it's a very, very inclusive system. And I do that very, very specifically. I can get in a room and I can talk to a room full of traders for, 2 weeks, and I still have stuff to talk about. Sometimes it's very good to focus in on something really, really specific. The reason I like to do RMO is I can actually say, yes, give me a stock, give me a couple stocks, let's pull them up in the software. And generally, we'll probably have a chance to look at 4 stocks today. Probably 3 of them will work really, really well on RMO, and 1 of them won't work. It isn't perfect. It doesn't work all the time. But it would be very, very easy for me to go back and find really only the best performing signals. What I want to do is I want to give you a really good estimate of how it would work on the stocks you're interested in. And then that way you can see if it's something that potentially has some value to you. What we won't cover is we're not going to be talking about, our MetaStock power tools. We're not going to talk about, the news that we offer, which is excellent. We're not going to be talking about kind of all the fundamental and technical history. We're not going to be talking about how we can help you do testing of ideas and things like that. And the only reason I put this slide in here is I just want to be really, really specific here. I'm going to talk, we've got a whole car powered with gas, and really I'm just going to be talking about one small part of the, let's say, the navigation system. There's a lot of stuff here that we just won't cover. And for those of you that are interested, and everybody that registered, you're going to get a free copy of our Secrets of Successful Traders book. And what I'm going to do is that also talks a lot more about some of the capabilities in the software and in the program. Okay, so enough of that. Actually, we talked about this. There's a picture of the Thomson Reuters offices. It's a huge company. The year that I looked at, we made about $19 billion. 90% of that revenue is actually selling to institutions, data, software, services, that kind of stuff. So one of the other things that we're proud of is, as of last year, and we're still waiting on the announcement for this year, but as of last year, the software that I'm going to show you today has been rated #1 in its price category for 20 years in a row. MetaStock Professional, which is our real-time platform, has won 9 years in a row Best Software, and that's by Stocks and Commodities magazine. That's a Reader's Choice Award. So basically everybody that subscribes to this magazine, and I would recommend it as a magazine, it's an awesome magazine. Everybody that subscribes to it, basically they vote in for their recommendations or what they like. 19 years in a row we've basically been their favorite software program in the price category that we sell. So we're proud of that. We're proud of our heritage. We're proud of what we've done. Now let's talk a little less about us and a little bit about what we can do for you. We're going to start to talk about RMO now, and I just want to kind of lay out a few things. RMO is a trend-following system. Okay. Now what's a trend? Well, there's a definition of the trend on there. I'll let you read that if you want to, but you've heard it all the time. The trend is your friend. Have you heard that one before? How about befriend the trend? How about a rising tide lifts all boats? How about, there's name a cliche around trends. You've heard it before, but basically what it all comes down to is that when people start to talk about trading, they generally want to trade in the direction of the trend of the overall market. And basically that is what our system is about. That is what this RMO system is about. It's a trend-following system. Basically, it's going to look to get in when there's an established trend, long-term and short-term, and trade in the direction of that trend. Very, very simple. I'm going to show you how to do it. The thing that I like about RMO is it's very easy to use. Okay? If I do a fairly good job today, you'll understand kind of the 3 things that you're going to look for to establish a trade, how to manage your lot stops. It's not subjective. When I go in and I teach people how to use this, I usually pull somebody up and I say, can you tell me if this is overbought or if this is bullish or bearish? And they can. It's very, very subjective, not objective. You're not making guesses. If you use it properly, it's going to help you with your money management. It works on a lot of different time frames. And I can tell you personally, because I've probably at this point in my career at Equus looked at hundreds of different instruments on all kinds of different markets, from Egypt to US to India to Saudi Arabia to Australia, and it works very, very well on a large number of instruments, and it's very, very simple. Okay. RMO basically stands for Rahul Mohindar Oscillator, and some of you may be familiar with Rahul Mohinder, some of you may not be. Let me just tell you who he is. Rahul Mohindar is actually a dealer of ours in India. He basically helps us sell the software. He's a panelist on CNBC. He runs a trading school for India, for people in India, basically. As such, last year he was our second best dealer. The year before that he was our best dealer. He does a lot of really good business for us, and we really appreciate him. He was in the office, and we just were kind of probing, and we were playing with him. We were asking him what he teaches people how to trade over there in India, and he showed us the methodology that he uses. We liked it so much that we purchased it from him. We packaged it up inside of MetaStock, and we included it in MetaStock for free, basically. So basically I'm going to go through the kind of the rules that he teaches in terms of how to identify what your trends are, those type of things. So let's go ahead and talk about the three-step process. Step one, again, we said primary prevailing trend. How do you identify the primary trend in a market? And it's actually going to be fairly easy. And this is the point where I need to get into MetaStock. I need to pull up some stocks. What do you guys want to see today? Give me some symbols, and let's just go through it and kind of show you how it works. I'm getting a lot of requests for ESH12. I'm not sure, is that a futures market? Or both Stephen and Mahesh asked for ESH12. Can you tell me what that is exactly? I don't trade a lot of futures. Okay, it's a futures contract. Okay, let's see if we can find it. What is it called? Oh, is it the? Oh, it's the S&P, the US at ES. Okay, I can do that. US at ES. Okay. Now, what I'm going to do, right now I'm looking at the diamond, so let's just open some of these stocks and futures that you guys are interested in. Now, because we have data that's just pretty much anywhere in the world, the easiest way for me to look it up is it starts with the country code, followed by, basically for a future, you'd be US at ES. It'd basically get you the S&P minis. Okay, let's look at a few other ones. Tim asked for DCTH, so let's do that. I'm not sure what that is, but it looks like it's Delcast Systems. Okay, let's do another one. Oh, the British pound, Japanese yen. So I could pull that one up in a second. The S&P mini. Well, that's pretty similar to what we're going to be looking at with the US at ES. So a medical device manufacturer. Okay, and of course we get a request for Apple, USAAPL. Okay, and of course we get a request for Google, semicolon GOOG. Okay, and that's probably what we're going to have time for today. You know, we'll spend most of our time actually talking about how to identify and setups and that kind of stuff, and then we'll have a chance to look at some of the other stocks that we're looking at as well. So I'm just going to go ahead and open up these particular stocks. And since there was a few requests, I'm just going to throw dollar, euro, yen, euro, US dollar, EUR, USD. I think that's the proper symbol. We'll pull that one up separately so I can find it. I don't do a lot of currencies, as you can tell. Oh, I had the typo in there. I'm just going to fix that real quick. Okay, now since I'm doing the futures contracts, it's going to ask me, MetaStock asked me, do I want continuous contracts or specific contracts? I'm going to actually do continuous. We could do specific as we want, but what I want to do is I want to get a lot of history on there so we can kind of look at some historical trade examples. So for what we're doing, continuous is going to work better today. Okay, and we'll just have it pull up these particular charts. And while it's getting it done, these are all on a daily basis, although I can do any time frame that I want. Okay, and let's just take a look at some of these, and let me show you. Now obviously you notice I have a lot of different indicators applied to some of these charts, that kind of stuff. MetaStock has saved kind of the last view I was looking at for a particular chart, and it kind of stores that for me. Let's start with the S&P, because the S&P is going to be a really good kind of major market index. So we'll start with that one. What I'm going to do is I'm just going to, in order to apply the indicators that I need to see in order to kind of do the analysis on RMO, I need to just apply them into the chart. It's fairly easy to do. What I'm going to do is I'm just going to right-click on an empty part of the chart. I go to Apply Template here, and I'm just going to go down to RMO Trade Model, basically. Okay, and that just applies the indicators that I want to look at. It applies the color highlights that I need to see in order to make a kind of a look at RMO. So just go ahead and click on Open here. Okay, and here I'm going to just basically here we've got a chart of how you would be looking at it when you look at RMO. Okay. The first thing that I want to do now, getting back to kind of what we were talking about, is we want to trade in the direction of the general trend. Okay. So the first thing that we want to do is we want to be able to identify fairly easily whether, in this case, the mini S&P 500 stock index is going up or it's going down, whether it's strong or whether it's weak. Okay, and to do that, we're going to use an indicator called the Rahul Mohindar Oscillator, so the RMO indicator, basically. Okay, what I'm going to do is I've just made this particular oscillator full screen, and I'm going to tell you that basically this particular indicator is going to be Rahul's measurement for long-term strength or weakness. Okay, so in this particular case, I can look at this instrument. In this case, we're looking at a futures contract, and I can say, okay, well, very easily, the way we're going to read this is if it's here above the 0 line, then over the time period the RMO looks at, it's going to be bullish, okay, if it's above 0. If it's down below 0, then we're going to say it's bearish. Okay, so right now, and for the last, let's see, pretty much most of this year, since about the 22nd, the S&P has been bullish, which means it's been going up in price. Okay. So remember, this is rule number 1. If it's bullish, which it's bullish right now, and it was bullish back here, and it's been a little bit choppy, as you know, lately. But if it's above 0, then we're going to say that currently this particular commodity or stock or whatever we're looking at is bullish. Okay. And now, since we want to trade in the direction of the trend, if this is particularly bullish, then we would want to look to take long positions. Okay. So this allows us to make long positions, or to take long positions. Okay? Very simple. It's not permission to go long. It just gives us an allowance to take long. We look at this particular instrument is trending up. We have an allowance to go ahead and take a long position. Okay? We don't have an allowance to go short. You don't want to go short into a bullish trend. You want to go long into a bullish trend. Trade with the trend. The trend is your friend. Befriend the trend. All those kind of crazy things. So we're not allowed to go short. We're only allowed to go long. Not allowed to go short. Okay. Now, coincidentally, we would read it the opposite. If we're down below 0 here, then we would say that currently we're in a bearish zone. Okay. And then following the rules of this, we would be allowed to take short positions. It's just the exact opposite. Again, this isn't permission to go long or short. It's allowing us to take short positions. And of course, the opposite being true, short buying is not allowed on all Delta flights. Okay? Simple, right? Basically, this is what we're looking at. We're looking at the long-term trend of this particular instrument. If it's above 0, then that means the stock is going up in price. That means it's bullish. That means we're allowed to go long. If it's below 0, then the stock has been trending down. We don't want to go longish because we want to trade into that trend, and so we would only be allowed to take short positions. Mikkel asks, is this being recorded? It is. And Conrad, if you do have questions, just let me know, please. Go ahead and type them in. If I miss them, go ahead and type it again. I'll try and answer as many questions as I can as long as they don't take us too far off subject. Okay? The other thing that I want to point out to make it a little bit easier for you is the color coding on the chart. Okay? So what I'm doing is I'm just putting some lines on here for when the crossovers happen. And what I want to point out to you is when I go back to the chart here, okay, what I want to point out to you is if we're in a bullish zone, which we were for in most of 2011, remember this good huge run up in the market, you notice down at the bottom it just tells us that the RMO is currently bullish. That means we can just look at either look at the indicator up here, we can look at RMO bullish down here, and it's going to give us a good impression of what we should be doing with the stock. Okay, step number one, we want to trade in the direction of the trend. If it's bullish, we want to buy. This should be fairly simple for you guys. Hopefully I explained it well. If you have any questions, ask. Okay, if we're clear on step number one, we can kind of go into step number two, which is just a little bit more complicated, but not very much. A couple questions that did come in. Can this time frame on the chart be changed to range, minute, etc., etc.? Yeah, right here, if I click on this D, it allows me to change to different time frames or different intervals. So if I wanted to go hourly or 30-minute or 15-minute, I could go and do a tick chart. If I wanted to, there is a custom option right here, and I could do like a 13-minute chart if I wanted to. So you can change the time frames, and it's fairly easily to do. You're welcome, Dean. Thanks for the question. Frank asks, is this comparing the security to, is this a relative strength comparison? And I do have to say I don't think so. But the math behind the RMO is secret. It's what they call a black box in the industry. So most of the stuff in MetaStock is actually an open box, but this is basically Rahul's proprietary methodology, and it's not a public methodology, so to speak. Okay? Step number two, let's go ahead and get into there. So again, just to recap, I think recap's important, but let's go back into my PowerPoint. We'll identify that primary or that prevailing or that major trend. Okay, it's the first thing that we want to do. If that's in our favor, and here's a screenshot. I do keep copies of this, so if I don't have live charts, I can show it to you. But basically, if the RMO and it's in a bullish zone, then you're allowed to buy. It's not a trigger to enter, and you're not allowed to short. The exact opposite is true. If it's bearish zone, you're allowed to short, but you're not allowed to long, and it's still not a trigger to enter. So we should never be trying to buy a stock just because that RMO goes above 0 or below 0. Step one. Okay. Step two, okay, so we've identified that long-term or that primary trend. The second thing that we're going to do is we're going to identify the short-term trend. Okay. And we want to make sure that that matches up with what we're doing. Because if we have the long-term and the short-term trend in our favor, then our odds are going to be increased that we're going to make more profitable trades. Okay, so let me show you how to do that. I'm just going to swap back into MetaStock. And before we talked about the big green indicator, I'm going to go ahead and take my notes off here. Okay, I'm going to go ahead and delete this. I'm going to go ahead and go back. I'm going to go ahead and just take some of my lines off the chart, keep it clean. And what I'm going to do is we're going to talk about this indicator that we call swing trade number 2, which is our short-term measurement of strength. The easy thing about this indicator is we read it exactly the same way. I'm going to make one of these indicators into a line. And I'm not talking about the one I made into a line. We'll talk about that one in a second. What I want to talk about is I want to talk about this one that we've got labeled swing trade number 2, which is a kind of a pink or a magenta color. And what I want you to do is I just want to kind of explain exactly how this indicator is read. You'll notice that this indicator is also above or below 0. Okay? And you read it exactly the same way. Okay? So right now, on the S&P 500 stock index future, it's above 0, which means that the same thing it does on the longer term. You'll notice it goes down and up a lot faster we are looking at a shorter time frame, so it's a lot more receptive to market strength. So what we want to do with this, and I'm just going to cheat a little bit. I'm going to copy my notes from bullish before. Okay, so this is the short-term indicator. If it's bullish and the RMO is bullish, so it's in a bullish zone, then we're still allowed to take long positions, and we're not allowed to go short. We don't have our permission to buy yet. We're just making sure that the traffic lights are green before we head into town, and if they're all green, then we're going to have a much safer journey when we get there. So we want these two to match. We want this to be above 0. We want the other indicator to be above 0. Okay? So if they're both bullish, we're allowed to buy. If they're both bearish, we're allowed to short. What do we do if they don't match up? In other words, what happens if we have a long-term reading of bullish and a short-term reading of bearish? Sit tight. Do nothing. Wait. Yeah, that's exactly right. Those are some really good smart group tonight. Basically, we want them to match up. If they don't match up, we're not going to have as much of a good chance of getting into town or making a profitable trade, so we want them to wait. We actually do have another option if we want to. If we are looking at an instrument where it doesn't match up, we do have a scanning tool in MetaStock that can go through and scan through the markets and tell you which some stocks that actually do match up or some futures that do match up. So you don't necessarily have to sit tight, but you're not going to do anything with S&P 500. Okay, just taking a little drink. One other thing that I want to point out, before I showed you how we were highlighting the colors of the ribbon where it says RMO bullish, RMO bearish there at the bottom of the chart, I just want to show you kind of like what we do with the actual bars to kind of indicate which position this is in. Okay, so I've just, oops, that was the wrong way. Let me do this. You'll notice that when this particular indicator pops up above 0, all of a sudden we're going to start to highlight these this for you blue, right? And when it goes down below 0, we start to highlight it red. Okay, so if you're looking at this and you want to do step number 1, you can either look at the bullish zone here at the bottom, and then when you want to do step number 2, you can look at the color of the blue. If it's blue, then we know that the swing trade number 2 is above 0 or below 0. Okay, so it does basically give you an option. The way that I look at it is very, very simple. I look at the color of the bar to know what this indicator is doing. I look at whether or not I'm in a bullish zone. It just makes it easier. And Rahul is very, very specific. He doesn't care if it's way above 0 or way below 0. It's either above 0 or below 0. He doesn't complicate it to look for divergences and stuff like that. He wants to keep it very, very methodological, you know what I'm trying to say. Very, 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 very objective and not subjective to guessing about what the Fed is going to do and, you know, what the news of the company is and things like that. It's either bullish and trending up or bearish and trending down. Very, very simple, very, very repeatable, not making guessing games here in terms of what you're going to do with your account. Okay, so that's step number 1 and step number 2. And just to recap, probably our most important steps. Step number 1, we identified that primary trend. Step number 2, we identified our short-term trend. Some examples here in the PowerPoint that we're just going to skip through because I'm showing it on the stocks and futures and stuff that you asked for. But basically, here's the rules. If the primary trend is bullish and the short-term trend is bullish, you're allowed to buy. You're not allowed to short. And it's not a trigger. If they're both bearish, then you're allowed to short, but you're not allowed to go long. If they don't match up, you're allowed to wait. You're allowed to use the scan, or the explore, what we call it, to actually scan for other opportunities. If you really want to trade that day, it's better to find those trades where the odds are going to be more in your favor. Okay? So that is step 1 and 2 in a nutshell. Step number 3 is identifying a trigger point, or figuring out exactly how to go ahead and execute that trade. And this is where it gets really, really specific. We're going to talk about some really, really important concepts like, you know, how do we manage risk-reward? How do we basically look at what our risk is? Where do we put in our stops? How do we move them? Those type of things that are really going to be fairly important to having a successful mechanical trading system. So here's what I'm going to cover. We're going to go back into the software. I'm going to show you, based on some historical trades, how to structure a trade, how to manage your stops, how to get out of the trade when the trade changes. So let's go ahead and to do that, okay, and again, remember kind of that disclaimer that I had before. I don't see an active buy signal right now anyway on the S&P 500, but if we were trading it, and let's just say we just started to trade it this year, okay, basically on this day right here, the 21st of last year, we had to have active buy signal. Based on the rules I'm going to show you, because I want to be able to go through a whole trade or two, but based on the rules I'm going to show you, you would have gotten into this trade and it would be making money for you. Okay, that doesn't mean buy now. You would have wanted to buy when the signal's all lined up. Okay, so let's go back a little bit. That's it. I'm just going to go back to this period of time right here before this pretty good massive run up. This was a really good time to be trading the S&Ps. I actually trade more diamonds myself, but I really like it with major market indexes. Now, I just want to kind of show you on a trade perspective how this would work out and how it would kind of pull together for you. Okay? And so let's go ahead and just pretend that this is the very edge of the chart, okay, where I've got this horizontal line. We've just went through kind of a bit of a bearish period. It's in your Wayback Machine, it's September 1st, 2010. Okay, and we get a buy signal on our chart. Okay, but we take a look at that and we're in a bearish zone, so we're not allowed to buy. We're in a bearish zone for RMO and we're in a bearish zone short term, which is why my chart's actually red and not blue today, so I'm not allowed to buy. Okay, so what do? I'm allowed to wait. We wait the next day, and so this would be the 2nd of September in 2010. We get into a bullish zone where we are allowed to buy, and you'll notice that not only are we in a bullish zone starting this day, short term we go into a bullish zone as well, so we're allowed to kind of structure a trade at this point. Okay, so this is the day that I'm actually going to take a decision to actually buy this particular instrument. Now there's a couple things that are very important that I want you to pay attention to right now in terms of managing this trade. We're not just going to go ahead and buy it. This is the day where we're going to decide to buy. So what I'm going to do is I'm going to get very specific about how I want to structure this trade. Okay, so what I'm going to do is I'm going to take my horizontal line tool. Okay, now pay close attention. What I'm going to do is I'm going to identify the high of this bar and the high of the bar before. So this is the day I'm buying. This is the high here. This is the high here. And I want to put basically my entry just a little bit above this high. Okay? So what I'm going to say is if it goes above the current price activity, I'm going to go ahead and buy it. That's the point at which I want to buy. Okay? Now what are we doing? When we do this, we're basically waiting for a confirmation that the stock or the future or the Forex market is going to continue to trend in the direction that we want it to. Okay, so we're basically looking for a confirmation of trend. And I do this every time. I'm very methodical about it, and it will save you bad trades because a lot of times you might get this fake out. You get your buy signals, everything lines up, and then it pulls back the other direction. Happens a lot. We're just doing another thing. We're going to say confirm the trend by continuing to trend up a little bit. Okay? Now I'm going to do the same things with the lows. So this is what I've identified as my entry point. If it goes above this price point, which I've put on my chart, I'm going to go ahead and buy in. I'm going to do the same thing with the lows. Here's the lower low of the 2 days. And I'm going to use this. I'm going to make you guess. What am I going to use that for? The lower line. Let's see if we have some good guessers. Stop loss, yes. Very good. Very good. Mahesh asks, can you scan for RMO to be bullish and swing trade 2 to be bullish and swing trade number 3 to be greater than 2? Let's take a look at that one in a minute. Let me just kind of go through some trade examples for you. Okay, so we got the buy signal here on the chart. Okay, we have all of our rules in. We're going to basically go ahead and know, okay, if it goes above, we haven't just made a decision to buy yet, but as close to 1105.36 as I can, I'm just going to type that out on a chart. I'm going to buy Okay, and when I buy, I'm going to put in a stop loss of 1076.14. So now I know where my entry point is going to be now, and I know approximately where I can get out as long as we don't get into gappy situations or the S&P gaps way below my stop loss. I know approximately where I'm going to get in, approximately going to get out, so I have approximate idea of what my risk is. My risk is going to be from the difference between 1105.36 and 11 something's wrong there. 107 had an extra 1 in there, 107. So that'll be kind of the risk that I'm taking on. Okay. So the very next day we do trigger in, okay, and I get in just as close as I can to that price point, the 1105.36. Go ahead and put in a stop loss, so if it goes against me, I have a risk defined. Okay. So how does that work out? Well, okay. Let's just kind of continue to play with the trade. As long as we're in this trade and we don't get a trigger to do something, we're going to hold on to it. And as you know, that was a very good year for trading. Okay. Here we get, oops, let me back up a little bit. I lost where I was. Okay. So we get a very, very nice run up. Okay. Here we get a sell signal, which means that there might be a change of strength coming. When that happens, as long as I'm still bullish long-term and bullish short-term, I'm going to go ahead and hold on to this trade. Okay, but I'm going to start to watch for it. If it gets bearish long-term and bearish short-term, I'm going to go ahead and exit out of that position. Okay, and that's exactly what happens right here. Is short-term it gets bearish. You see where this red kind of bar comes in? That's where we get bearish on a trade. Okay, but the market does turn around. We didn't go bearish long-term, so we're going to continue to go fishing with this particular trade, and it does continue to go ahead and start to go up. We get another buy signal, and here we want to do something very, very important. Okay, we don't want to buy more. If you listen to Rahul and kind of the way he explains RMO, he's very, very adamant that you just buy as much as you want to buy in your first initial purchase, so we don't pyramid in using this methodology. So I'll help you out in that respect. What do you think we want to do at this particular spot? We've had a fairly good trade. We have a feeling that it's going to continue to start to rise up from this level. It's just been tested a little bit, and we're profitable. What do you think we want to do in terms of now we have another buy signal on the chart? What should we do with it? Move our stock up. Yeah, that's right, Conrad. Exactly. So what we're going to do is we're going to go ahead and move that stop loss from 107.64. We're going to take a look at the low here on the price. We're going to take a look at the low the day before, and we're going to place a trailing stop right below that. So now instead of being a stop loss, it's a profit protection mechanism, right? We want to make money when we trade. So now what we're going to say is, well, if this comes down to below 112, 1210.36, let me write that on the chart. And we're going to get out of it as close as we can to that level. Okay. Here we get a sell signal, which is generated automatically by the software based on a change of strength. Here we get another buy signal. So again, we're going to move that that trailing stop up and protect just a little bit more profit. So this should be very, very mechanical for you. There's not a lot of guessing about what you're going to be doing and that kind of stuff. So 123.12 is our new stop loss. I'm just going to keep track of that. Okay. And then what happens? We continue to rise up. Okay. Here I move my stop loss up. Okay. I do that because I get another buy signal on the chart. What happens is I stop out. Right? Okay. So I got in initially on an S&P contract, hypothetically, at 1105.36. My final stop loss when I triggered that out of that particular trade was 127.26. I'm not a futures guy. Is that a fairly good commission? If I was trading S&P contracts, would that be a fairly good trade? You tell me. It looks like it's a fairly good trade on a S&P spider. It certainly would be a very good trade for that. So right here we've just made a lot of money. Now this is an idealized trade. In other words, I wanted to show you a trade that obviously would work well. We're going to show you some that don't work well. But on this particular one, staying in the same direction of the trend, giving ourselves room to breathe, maintaining that stop loss, we were able to lock in a lot of profit on this particular trend. And this works really, really well at identifying those particular trends and helping you stay in the direction of the trend. Okay, so we stopped out here. This is the day that we stopped out. That was the end day of the trade. Now, we're still in a bullish zone. We're still bullish both long-term and we're bullish short-term. Okay, which means if we get another signal to get into the market, we're going to go ahead and take that signal to get into the market. Okay, which is exactly what happens 3 days later. Okay, only this one is a good example of why we want to put in a stop loss. Okay, let me show you what I mean because we're going to stop out on it. So right here, I'm going to go ahead and put in my line to get in, and that would be at 113.0752 is where I'm going to say that I put it. And right here is where I'd put my stop loss. And what happens is we go ahead and trigger into that trade. It comes down and trades against us. And do we have a losing trade? You betcha. So yeah, I mean, definitely that's why we want to have kind of a very mechanical trading system to work with. Okay, I want to point out a couple of things because I'm fairly familiar with this chart. I'm hoping that that kind of gives you a good overview of how to manage your stops. This thing isn't perfect, okay? Nothing is. But I want to kind of point out a few things on Spider because I'm sure it's going to be very similar to diamonds. And here's what I want to say, okay? Right here, would you guys all agree, looking back in time, that this September to May was a fairly good run-up in price for the S&P 500? I would argue that it is. Okay. Now, if we were just using this RMO to kind of identify where we're trading in a position, we would have only been looking at taking long positions from about 108.50 to approximately 1,300, which in my book is about a 30% rise in that major market index. Okay. So if we're only looking to go longs and managing our stops all the way up that particular trade, I would say that would be beneficial for us. Okay, but what about the market crash that happened after that? Let's go ahead and just kind of take a look at this because it's not perfect, like I said. We then went bearish, did we not? We had a little bit of an oscillation between bullish and bearish as the market was trying to figure out whether it was in a new trend. And you're going to have some losing trades along this way. But what I think is remarkable is right here, before we had the big scare in August, September, October that the world was going to collapse again, and you know that there was a lot more uncertainty coming in and all that kind of good stuff with Europe, you'll notice that we were bearish right before this huge market crash. Okay, and not only just before, days before, we were actually saying, okay, it's time to get bearish. And during that time, we went from 1,300 to down to 1,100, and we were bearish all the way down to 1,200. But here was some very good trading opportunities for me personally on the diamonds because we're just looking to take long positions. And I didn't get in at the exact top. I didn't go short at the exact top, and I didn't go, you know, but it was a great way for me to kind of stay in the direction of that trend, which got very, very bearish very, very rapidly, if you remember. I'm sure you do. Okay? And so if we moved our stops, which is exactly what I did, I had some really pretty good trades right along here. There's been a few trades right here in the past where it's just been a little bit of a choppy action, but that's just what you're going to get when you trade a trend-following system. Okay, so it's not perfect. It doesn't work all the time. It doesn't work on all of your trades. It does a really good job of keeping you in the trend when the trend is good, and that's why stops are so important, and that's why you want to follow the rules very, very religiously. Now we're in a good trade right now. It's making money for us. But again, we want to just keep this mechanical. We want to not trade on emotions, trade on based on what the market is telling us. So that is the S&P 500 for you. Carl says, couple of things. Yeah, somebody said $50 times 170 points is 8,550 per contract. Yeah, that's pretty good. I'd say that was really awesome. A couple questions, and I'm getting a lot of requests for this, is will this work on the 30 and 15-minute chart? And that's a very good question, and since more than one of you have asked, let's go ahead and look at it on a 30-minute and a 15-minute. Well, actually, let's just look at the 30-minute chart. So again, to just change this to a 30-minute increment, what I'm going to do is oh my goodness, we're going to look at this quickly on a 30-minute chart because I just realized I've already been talking for 47 minutes. So it does work on a 30-minute chart. I'm not sure how well it'll work on the S&P contract on a 30-minute chart. Let's eyeball it real quick and see what it looks like. Okay. It's a little choppier, but look at, I'd say from a perspective, the easiest way for me to eyeball this is just a few days. This is from the 10th to the 18th, so a few days of a 30-minute chart. For the most part, we've been rising up. We've been bullish, with the exception of a few increments here. We were bullish for this particular run. That looked good. Was bullish for this particular run. That looked good. I'd say right now, without kind of going and doing some really specific, it would work okay. I'd probably maybe look at a 60-minute or a 15-minute and just really see how well it works out. Again, I'm not touting this as the only way to trade. This is one that I really like to use. But if you're an intraday trader, you might want to look at some of the other built-in systems with MetaStock. Also, you can test methodologies in MetaStock. So if you're a trader that wants to trade the S&P 500 futures contract on an hourly basis, you can actually go in and say what of the methodologies built into MetaStock is going to work best at, minimizing my drawdowns and maximizing profit, and is going to trade about how often I want to trade. And that's a whole nother lesson. We're just not going to get into it today because I barely have time to look at some of these other charts that I promised you would look at. So let's take a look. That was the S&P. I would say on a daily basis it looked good. The verdict is out still on the 30-minute or 60-minute chart. Let's look at Delcath, which was one of the first recommendations or requests that I got. Okay, and Delcath looks like we had a really tremendous gap down here back in February, March of last year. A little bit of an uptrend here. Let's see what RMO looks like. And we're just going to just to keep things on schedule, so to speak. Go ahead and apply the template. And we'll just take a very, very quick eyeball look at how everything looks on this. Okay. I'd say we've been pretty much trended down since May or June. It looks like it's been bearish since May or June from a long-term perspective. If you're following the rules, you'd probably get short right about here, move your stop here, stop out here, take another short position. It looks like it's working fairly well with Delcath. We've had a little bit of a ride up. I'm not sure that this is an instrument that I'd like to trade personally, but it looks like it's keeping us in the same direction of the market trend. Okay, let's look at Apple. I look at Apple all the time, as you imagine. A lot of people are requesting to look at Apple and Google and stuff like that. I can tell you RMO works pretty good on Apple, based on kind of what I've seen. Even though it is a little bit of a more choppier instrument, we have had this big bullish trend just recently, and it would have a song for that, has a song for this rise up here. It works fairly well on Apple. Again, this huge dramatic rise up that happened to almost every stock back in 2010, 2011 had you long almost the whole time. And you can look at that on almost every stock that we pull up with RMO. You're going to have this really good trading history all the way through April. It gets a little bit choppy because the market's identifying a trend. And right now we're kind of identifying some bullish trends in a lot of stocks. So I think it might be a good opportunity to buy based on kind of like what we're looking at. Again, not a recommendation to buy Apple. I can't do that. But it works fairly well on Apple. Let me go ahead and Google. And now with Google, let's see how it works. RMO trade model, open. Okay, and so with Google, just looking at the last couple of trades, here we would have gotten long. Probably actually taken a stop out right here where it went all bearish. Have another long position right now. Kind of the jury's out on whether or not we'll make money. Again, we're kind of running out of time, so we don't have some time to really kind of dive into this thing and look at it. But it's a very, very mechanical method that works really, really well on a lot of different instruments. And my recommendation isn't to go ahead and buy the software so you can start trading with RMO. My recommendation is to look at RMO for some time, see if it's something that works for you. Look at some of the other methods, maybe even do some system testing to figure out, the best methods that would work well for you. And this is just an illustration of, a method I really, really like. Okay, so let's get a little bit back into kind of like some other things for you. I would recommend, if you want to trade on an RMO and you get MetaStock, I would recommend that you go through the training video we've got up online. And it's going to tell you exactly kind of what you should be doing. Again, this is what I like about RMO. It's easy. It's very, very objective. It's very, very rule-based. It employs solid money management. It works on a lot of different time frames, a lot of different instruments, and it's a fairly simple process. And I hope I was able to convey that tonight. Again, with MetaStock, we're really proud of the software. I mean, the tools in MetaStock are just unbelievable. And we just really talked about really a small portion of the program. I mean, we're talking about 32 different methods that are in there. Some of those are trend-following systems. Some are reversal-type systems. I mean, it's really a really good software package. We've won, and that's why we've been the best software in our price category for so long. I mean, really 19 years in a row. I'm hoping for 20 this year. I think we're going to get it. In the real-time category, we've been actually 10 years in a row. Okay. Now, what I want to do, actually, I want to just talk about how other people like us. Here's a Martin Hermel who is a partner of ours. He runs Investor Competence Center in Europe, and he did a manual backtest using no stops. And this was back in 2009 when we were really working on setting up his partnership. And he saw, what, it's amazing. I've got a performance of about 400% up to November 11th. And that wasn't even using stops, just taking the signals and getting in and out when the program told him to get out. I would recommend you use stops, though. In my experience, it works better. Here's another person that we work with, Dr. Cooper. He's got good things to say on MetaStock. I love our support team. We have a really talented group of individuals in Salt Lake City, Utah. So you don't have to talk to people in India if you have questions on how to do things. They're not going to tell you how to trade the market. Again, that kind of gets into some legal gray area. But if you have questions on how to do scans or things, they're very, very good in terms of helping you configure the software exactly the way that you want it. I like this particular quote, so I pulled it into my PowerPoint, one of the smartest pieces of software I've ever used. And a lot of you know Oliver. Oliver's been in the industry for many, many years, a big fan and proponent of MetaStock for many, many years. And he says something that I think is really, really true to me, too. And keep in mind, I've been using the software program for like 19 years now. Or, I'm sorry, not 19. Let's say 14 years. You can split the difference. But basically, like, it just blows away in terms of the flexibility of the software. We talked about a small portion of it. You can go in and engineer your own scans fairly easily. I can say that because I can write scans, and I'm a sales guy. I've seen software programs that have been out there that, maybe do something very, very specific that, are 4 or 5 times the amount of MetaStock, and they just do something really, really small. And the unfortunate part about that is really, as an investor, if you basically decide that that's not really kind of the method, or you want to try something else, with a lot of software programs, you really don't have the ability to do what you want to do. And with MetaStock, with the systems that are built in and the testing and the ability that you define your own everything, I mean, it's something that I think with the small level of investment that we ask for you to buy the software, it's really something that as you grow as a trader is really, really going to be beneficial for you. I mean, I just can't say that enough. There's still things that I'm learning about in the software program, very, very customizable for you. Let's talk a little bit about pricing for MetaStock. And what I want to do is I want to make this, I know you guys are traders. As traders, you want the biggest amount of reward with the lowest possible risk. So I'm going to make this a risk-free transaction for you. Okay. What I'm going to say is basically you can buy MetaStock. I'm going to give you all kinds of training. I'm going to give you data. I'm going to give you a package. And what I'm going to say is if you decide that MetaStock isn't something that can help you pay for itself and then make money in the markets, we're going to give you a money-back guarantee. You can try it out. If it's something that you like, you can keep it. If it's something that you don't think is going to be helpful for you, that you don't think is going to make you money, then you can return it and you're not out anything. So your risk is quite high. Your reward is, your risk is quite low and your reward is quite high. That's the way I'm going to say it, okay, which is the proper way to say it. So MetaStock end of day, we normally retail that at a $499 price point. If you want to buy it and you just say, I went to the Trader Tax Accounting Seminar, we'll give you a discounted price of $449, okay? MetaStock Professional, normally that costs $13.95. That's the one that's been rated #1 in its price category for 9 years in a row now. The difference between MetaStock end of day and MetaStock Professional is real-time capabilities, and that's it, okay? $11.95, get $200 off the software. Again, it still falls under that money-back guarantee. If you try it and it's not going to help you make at least $1,200 in the market, you can return it. Okay. Now, I view MetaStock as a huge toolbox. You know, there's things that you can do. There's hammers that allow you to scan the market. There's screwdrivers that'll help you test different methodologies. There's drill bits that are going to help you kind of get feedback and educate yourself in the market. You know, and in this particular case, we call them system testing, scanning, expert advisor. There's all kinds of news that we've powered it with Thomson Reuters, some of the best news available in the world at a retail price point. To help make this a risk-free transaction for you, I'm going to basically waive your first month of data costs. So end-of-day data, if you were to buy MetaStock off our website, it normally costs $25 a month, and real-time normally costs $135 a month. If you take the trial offer on your 30-day money-back guarantee, you're going to get that first month of data for free. Okay? In addition to that, since it's a huge toolbox, and the better you understand how to use that tools, for buying the software, I'm going to include this bonus CD. Basically, it's a DVD. We put it together back last year, so it's kind of a brand new for us, actually. It's about a year old. But it just basically shows you how to go in and use RMO. It shows you how to use some of the Fibonacci trade methodology. Teaches you how to build different scans. It shows you how to use different systems. Shows you a lot of different things, how you can use MetaStock to do fundamentals. It's a brand new trading CD that we put together especially for our customers. If you buy it, you can buy it on my website for $100. If you order MetaStock, you can get it for free. Okay, I'm going to include that. It's yours to keep. It's not going to have much value without MetaStock, but you don't have to worry about sending it back to us. You can keep it and maybe give it to your buddy or something if you don't use MetaStock. Other thing I'm going to give to you is I'm going to give you one of my favorite books. This book is called Technical Analysis from A to Z. It's also yours to keep. In other words, if you try MetaStock and you decide that it's just not the software program for you, you can keep this book. This book is basically has a boot camp on technical analysis. So the first 35-40 pages are about technical analysis and where it started and how you use it and that kind of stuff. The last half of the book is actually technical indicators in encyclopedia format. So you can go to EMS and it'll explain to you what a moving average is, or you can go to S and it'll explain to you what a stochastic is and how you use that in the trading. And I think this will be really, really helpful for you. This year I'm going to give it to you for free just to try the software. Okay. In addition, if that's not enough, I'm going to give you a free month of online training. We have a company called LearnMetaStock.com. They hold webinar classes live twice a month on just how to use our tools. So again, I just want you to understand how to use our tools, and that way you can kind of use it. It's normally $100 to go sign up for LearnMetaStock.com, but I'm going to basically subsidize the cost of that first month for you. Okay. So here's basically the breakdown. You basically, normally MetaStock Professional would be $13.95. You pay $12.95. You're going to get a discount of $100. You're going to get a free training DVD. You're going to get a free book. You're going to get a free month of data, and you're going to get a free month of training hands-on. Okay. Basically, it's a total price of $12.95, total savings of about $500, $473, and a 30-day money-back guarantee. So if you basically go through all the training that we provide you and just say, hey, this isn't for me, we'll give you a refund of the whole purchase price. No questions asked. Okay. MetaStock end of day, again, the difference between MetaStock end of day and MetaStock Professional, real-time capabilities. $4.99 is the cost on the software, discount of $50. You get the free training still, you still get the free book, you get the free month of data, you get the free month of online training. $449 is your total investment. Your savings on that offer is about $312, and your risk again is 0. So there you go. To do this, I don't have order pages set up for this particular offer. It's a very special offer. Decided to offer it kind of today, actually. If you talk to Raven, I was like, well, I think I'm going to kind of really throw a great offer out there. So we didn't put together landing pages. You're going to need to call one of my sales guys. They can answer any questions that you've got. The number for that is 800-252-9901. If you're international, you can use the 801-883-8500. And you're going to need to mention this webinar. If you have any questions at all that I didn't address today, email me. My email is jeffrey.gibby@reuters.com. And there you go. I would encourage you to do the trial. Obviously, I am a sales guy. I'm going to tell you that. But it's definitely a piece of software that I've used for years and years and years. And, you know, you're not rated #1 in your price category for 20 years in a row. Sorry, 19 years in a row, unless you're doing the right things. Have some questions coming in. I'm gonna address them. Carl, you're right. The slide earlier said $11.95, not $12.95. $11.95 is the price, and I need to fix my slide. So thank you for letting me know. Pat says, do you use RMO in your trading? Yes. Does the software come set as up as the screen you are showing on the RMO, is a question Lewis asked. Yes and no. In order to get it on to show up exactly the way I was showing it on the screen, you just have to apply the RMO trade model. And the training that we're going to send around with the software will show you exactly how to do it. I'll show you how to do it just because, well, it's easy. So in order to, well, let me just open up something kind of random. I don't know, US semicolon MSFT, Microsoft. In order to apply that methodology to a chart, what you're going to do is you right-click on the chart, you go to Apply Template, and you go down to RMO Trade Model. Okay. Now you notice there's a lot of different templates in here, so there's a lot of different models that you can use and a lot of different indicator-based systems that you can use, but that's how you would get that particular one on your screen. How much for the data? End-of-day data? $25 for a region. I mean, we do have data North America, South America, Europe, Middle East, Africa. We have futures data. We've got Forex data. So $24.95 for end-of-day data for a whole region, and $135 for real-time data. Now, the data that we do is actually the Reuters data. It actually comes with all of the Reuters news, fundamentals, information, that kind of stuff that Reuters is pretty much famous for. Thanks, Jeff. We'll be in touch. Got a rush. Any international data streams from Mahesh? Yes, Mahesh. We actually we have data just about anywhere in the world. So what I would have you do to kind of talk about I'm going to assume that you have data, that you want data, and that you're watching this from probably overseas or out of country. So what I would just recommend that you do is just pick up the phone or email me, and I can send you a list of all the data that we've got. But you can call one of our sales guys. The country code's 1, and then you'll just dial 801-883-8500 and talk to them about the regions we offer. We offer, if you're looking for an exchange, we probably have it already. You're in New York. Okay, call the 800 number, save a dime. And we do have those markets as well. You're welcome, Tim. Thanks for the kind comments. If you have feedback on the presentation, you know, keep it constructive and email it to me. So it was too basic, it was too advanced, it was over my head. Let me know how I did. I'd love to hear kind of comments like that. And I appreciate everybody coming in tonight and spending an hour with me. I appreciate it. Hopefully it was beneficial for you. And if you know the options professor guy on television, try my software. I do think it's something that's going to be helpful for you. All right, thanks, guys. All right, I'm going to go home. If you have questions, I'll get to them tomorrow, and have a good night, everybody.